So good afternoon everyone. My name is Maurya Hanspal, and in this session we're gonna continue our previous sessions on the topics of commodities. So in the previous session we tried to understand what exactly do we mean by commodities, what are the commodities and different types of commodities being traded on the stock exchange, and what are the trading platforms or the trading exchanges on which these commodities get traded, that is bought and sold. We talk about the multi-commodity exchange, the MCX. We also talked about the National Commodities and Derivatives Exchange, your NCDEX. So these are a few of the platforms on which the commodities are traded, and two of the biggest platforms. Now further, we talked about the two different types of commodities on a heading basis. One was the agri commodities and the other was the non-agri commodities. So when we talked about the agri commodities, we talked about all those commodities which are derived from the farmland or through the process of agriculture. Your chana, your wheat, your barley, your soybean, your cotton, your moong. So all these things which are derived from the processes of agriculture are the agricultural commodities or the agri commodities. And the second set of commodities we had as the non-agri commodities. And the non-agri commodities were further divided into the three segments. One was the base metals, then you have the energy, and third one was the precious metals. So when we talk about the base metals, it is further segregated into two. We have the ferrous metals and the non-ferrous metals. In the ferrous metals, you have steel, iron. In the non-ferrous metals, you have those metals which do not contain iron. For example, aluminium, copper, zinc, so all these metals. Then we talked about the energies. In energies, we have what? We have the natural gas, we have oil, we have coal, right? And in the case of the precious metals, we have gold, we have silver, we have platinum, we have palladium. So all these commodities we try to understand that what exactly are they. Also, we started to begin our discussion on the impact of the various scenarios which are going around in the market, which can have a positive as well as a negative effect on these things. So what we are presently seeing in the present situation, like when we talk about the metals, we can see from the point of view of the commodities, the commodity prices are on a boom because ultimately these are the commodities, be it your agri commodities or the non-agri commodities. They come under the umbrella of the term commodities. Okay. So in this phase of correction, when we can see the Russia-Ukraine crisis going upon, the stock market has started to correct. Even your Nifty, your Sensex, and the global stock markets and the indices have started to correct. Be it your New York Stock Exchange, be it your Nasdaq, or be it your Dow Jones as well. But the major impact has been on the Russian economies and Ukraine economies, which people think. But that's not. The stock markets have started to correct, but the commodities market are on a boom. If someone at this present moment would just have commodities in his portfolio and not just any of the shares or bonds, or the other scenario can be if that person might have more than 50% of the commodities in his portfolio would be profitable right now. But not everyone has commodities in their portfolios. Even if they have commodities, it is max to max 10% or 15% in the form of gold or silver, and that's it. But now people have started to realize that diversion towards the various commodities is also beneficial. Of course, when we talk about the mutual funds, okay, in the mutual funds, you have gold and silver you people can have, but you cannot trade in oil, you cannot trade in wheat, barley, rice, and all these things. The companies which are affiliated with those commodities, like for example, in your mutual fund portfolio, you cannot have steel as a metal directly, but you can get exposure to steel indirectly. And how can you get exposure to steel indirectly? By buying the steel manufacturing companies like Hindalco, like Tata Steel, JSW Steel, JSPL. So all these companies are into the steel manufacturing and distribution. Similarly, you cannot include the direct per barrel price of oil in your portfolio. You can include those companies which are into the extraction of oil. For example, your GAIL, your Indian Oil, Hindustan Oil. So all these companies are into the extraction of oil. And when the price of the oil would increase in the commodity market, obviously these companies would also pass on the prices to the consumers. And ultimately the prices would rise and these companies would do well. But this is only in the case of the oil extraction companies or the oil manufacturing companies. Whereas people tend to say that when the oil prices are rising, the consumers are hurt the most. But they have no choice. They have to fill their tanks, whether they're two-wheeler or four-wheeler or three-wheeler. They have to fill their tanks with oil. So consumers are losing in this case, but the oil marketing companies or the oil extraction companies are benefiting, but not the oil extraction companies. All the companies which are into the manufacturing of oil or procurement of oil from different sources or extraction of oil, these companies would benefit because these companies are able to command a higher price from the public. Whereas those companies who are buying the oil from your GAIL, from your Indian Oil, from Hindustan Oil, for example, you have the MGL, you have the Maharashtra the Mahanagar Gas Limited, IGL, Indraprastha Gas Limited. So all these companies are the buyers of oil or the users of oil. So if you are a user of oil and your company is into the oiling sector, the oil and gas sector, and you are a consumer of oil or a user of oil, you stand at par with an individual only. And ultimately, you would be making losses or your profit margin would shrink because ultimately you're procuring the oil from those Indian oil companies or from your GAIL, from your Hindustan oil at a higher price. So one thing that we need to know that when we particularly talk about oil, all the companies which are into the manufacturing of oil, extraction of oil, and maintaining the reserves of oil, these companies benefit. Whereas individuals on the other side and the oil using companies that buy oil from the oil manufacturing companies, those companies stand at a no benefit or a zero benefit or less benefit. And that we need to understand. So all these crises that we can see that not only impact Russia and Ukraine, these crises are impacting the global economy. It can hamper certain trades. It can hamper the economies, as we can see in the case of Russia and Ukraine. It will further increase the prices as well because there would be lack of supply of the commodities from these countries. Now, these countries are into the supply of which commodities that we'll talk about in the next session. But to come back to the topic, since a lot of these countries are into the supply of the major commodities all over the globe, so when these countries are not able to supply the commodities, either because of the war situation or something that is followed by the war, like the US sanctions being imposed, or the various European countries have also started to impose sanctions on the Russia. So these things can happen, and further it can hamper the trade relations between the countries as well, because ultimately these countries won't be able to export. And if these big countries of Russia and Ukraine are not, mainly Russia, is not able to export things from its own country or territory, and also to import things for its own consumers, it can hamper the trade for other countries as well. Whereas the other countries who are at par with Russia or who are in competition with Russia for the export of a large number of commodities, be it your agri commodities and the non-agri commodities, those companies or those countries can take advantage of this. For example, India. Because if these countries are not exporting or importing stuff, the countries that want these materials or want the imports from Russia, those countries would be shifting their supply demands from the different countries. They'll say that Russia is not able to supply because ultimately because of the war situations, because all the supply chains have been disrupted and hampered and the economy is shut down absolutely. And of course, with the global sanctions, for example, the USA and the various other European economies posing the global sanctions on these countries. So that can further escalate the problem which has already been done. So if these countries are not able to export their commodities or anything from their own territory, so the countries which want the commodities on an urgent basis, or they had their contracts with Russia, so those countries would be cancelling off their contracts with the Russian territories or the Russian economy and shifting their demand to the other countries. And India is one such example. So that can benefit India, though in terms of the prices, it cannot benefit India as for now. But if the Indian producers can increase their manufacturing facilities and production facilities and can sell them abroad, so like they would be earning in US dollars or in some other currencies, and ultimately the country can also benefit. But a systematically reduction in price for a short-term basis, it cannot be done. And it can also happen that at the time when our country expands the production and are like fully sufficient, the Russia-Ukraine crisis is almost over. So these situations cannot be balanced in a day-to-day manner. It takes years and years to solve. Okay, that is one thing. In the next session, we'll be talking about some of the commodities which the Russia exports and also imports from the other countries, and how has this war affected it all again, and also about the US and the European sanctions which have been imposed on these countries. Thank you.